Now is the time to buy property. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. So now is apparently the time to buy property. This morning when I was looking through the news to look for things to discuss, something caught my eye. A little link going, now is the time to buy property. Of all things. I knew this is before the GDP data came out and we've officially entered the first recession in 28 years, in nearly 3 decades. We had a crash in GDP, the biggest since the Great Depression. But apparently now is the time to buy. And I think this is a good lesson for us all to just be wary about what we see in the media and what we see in the news. So I clicked on that link, and I thought, okay, I might have a look at it a bit later. And it went to this article here. Housing affordability hits an all-time high. So housing affordability is up. Fantastic. An RBA survey reveals. Now, this seems a bit deceptive in how it's written here, because it's not really an RBA survey, Royal Reserve Bank of Australia. Because I went to the RBA, I went to the RBA website over here, and I'm trying to find what I could get. Okay, they've got the charts pack, and we'll probably go through that later, actually. That's always good fun, going through the charts pack. But I couldn't find any surveys or anything like that. I hadn't heard about it. I didn't realize they did it. Well, it wasn't really an RBA survey. It was a survey of expert economists conducted by Finder to do with the exchange rate, the cash rate change. The cash rate change. And of course it hasn't changed. We'll bring up this one here, this cash rate. It's low. 0.25, it's not going anywhere. But before we get into it and discuss the actual survey they did and some of the responses, isn't that a little bit deceptive in a title? From an industry that is lobbying government to intervene and force digital platform providers, digital service providers like Google and Facebook and potentially others to pay them. Does it seem a bit deceptive? This is the old dying media. Don't they have a code of conduct? Don't they have an ethical requirement, a journalistic standard? Because it seems quite deceptive. It really does. Because it wasn't done by the RBA. It was done by Finder. Okay, Finder. So, and we'll see here. It was in this month's Finder Cash Survey. It's not from the RBA. It's a cash rate survey. And it's the largest of its kind in Australia. It's probably the only one. I mean, okay, it's are there any others? Let me know in the comments if there are other cash rate surveys of economists in Australia that are competing with Finder. Because if it's the only one, it's also the smallest one in Australia, the most insignificant one in Australia. I mean, this is just how the articles are written to manipulate us. Because a lot of people they'll only jump on the headlines, they'll only read the first paragraph, and they'll base their decision-making process on that. It's a marketing strategy. One marketing strategy is you want to get brand recognition. You want to get constant exposure. Gary Vee speaks about it a lot. And if you're interested in business marketing, online activity, social media, look up Gary Vee. His content is fantastic. It's fantastic. And that's, essentially why I'm looking at the strategy to build up the channel, exposure. That's why I'm producing a lot of content. And also why I try and streamline my process so it's as dodgy as you all know and love. But nevertheless, we're getting exposure to this again and again and again. And if people only read the headline, housing affordability is up, cash rates are low, experts say now's a good time to buy, maybe I should jump in, maybe I should buy. So while all experts and economists surveyed correctly predicted the cash rate to hold at 0.25%, okay? Wow! It's even better, guys. It's even better. Not only are they telling us housing affordability is up, but the experts and economists managed to predict the cash rate staying at 0.25%. Wow, they're like omniscient. They must know everything. They must be just beyond normal men to have this insane knowledge. Or you could just follow the bloody news. Or other things. You could look at the unemployment data. You could look at the speeches from the Reserve Bank. But see how it's crafted this way. See how it's crafted this way. I guess not everyone is a, property, finance, economist nerd like me and is reading all this stuff. But better yet, nearly 2/3, not quite 2/3, but nearly 62% responded with positive sentiment about housing affordability. A record percentage since Finder first started collecting data on the topic back in 2018. Wow. Only 2 years ago. I mean, housing affordability. Well, yeah. Housing will come down. We're seeing that already. I did a video the other day just looking at... was it this morning? Yes, it was this morning. I'm getting confused. Just looking at the investors that are flooding out of Sydney. The investor exodus. There in the units market, you're getting discounts of up to 15% since April. It's gone back in years. The asking rental price is back to 2013 levels. Where's the headlines about that? Where's the headline about that? So, I mean, Finders, their sentiment tracks the economist gauges in five key things. But does it matter if property is more expensive if we have, or property is more affordable, sorry, if we have job rates in the gutter and unemployment rate at 7.5%? And most importantly, just this one little thing that you may have noticed that came out today. Just the top of mind, the fact that Australia is entering the worst recession it ever has. I'm just looking where it is. I'm going to stall while I bring up the data. GDP growth, quarter on quarter, is down to 7%. And I'll max this out. You can see there. The recession Australia had to have doesn't even compare to this one. It doesn't even compare to this one. So let's jump over and have a look at what the housing affordability sentiment says. I mean, essentially, it's their opinion of sentiment forward, of housing affordability. Housing affordability, it's up. Employment. Positive sentiment. Where are they getting this from? Is it economic sentiment or is it the economist sentiment? More than half of the economists. Who cares? Should we care what they believe? They believe that they shouldn't gain access to their superannuation early. Okay, well, fantastic. So, in some ways, this doesn't matter. This doesn't matter. What is more important, because we'll bring up the economists there. They're professionals in their field and they have opinions. Unless you consider their opinions a distillation of a particular school of thought, or the public sentiment is distilled through them so you get a more refined understanding of it, then perhaps it's good. But does it really matter? This is only a sample size of 40 people, even if they are economists. What matters is this number here, this little chart here, which is showing consumer sentiment. See how it's below 100? That means the sentiment is generally low. There's more people out there that are negative than that are positive. That is what matters. Our savings rate right now is over 19%. Guys, it's insane. Our business confidence is, it's gone down. Conditions have improved, but confidence has gone down. So the question I put to you is, should we really put extra weight on a bunch of Keynesian economists and experts as opposed to the more broader economic surveys? What do you think? I mean, it's a sample size of 40 people. And sure, they've probably got access to more information. But then how's that any different or any more valuable than the data that's gathered by, the consumer sentiment of Westpac or ANZ or some of the others? Now, there's another thing to be careful of when you're presented with these type of things, when, now's the time to buy, quick jump in, and all the young couples there that are, buying their houses. So it's supplied. So obviously this is I'm assuming Finder supplied the information for this article, for this news piece. Remember, news websites, news corporations, they need protection by the government. They need protection by the government, guys. They have mandatory advantages on social media and forced payments to them. I'm getting more and more frustrated when I'm just seeing through the veneer of this stuff the more I look at it. But let's go back in time. We've got this amazing ability. Now I'm going to grab my stein of coffee, and I need you all to think really hard and have a shot of coffee, and we'll travel back in time in a moment. Just in a moment. We'll go back to the heyday of Australia, back to 2018. 2018. When? Why now could be the time to buy property, with some tipping an imminent market recovery. And this was written in December. I need to move it over so you can see it. In the 4th of December, 2018. Another headline from news.com. I just happened to find this when I was looking for the other article. There's no point really going through it. Let's bring up this chart. Property prices. So 2018. We were heading at the peak. Some of them were heading down. Look at Melbourne at 2018, guys. Look at Sydney. Look at Brisbane. What do you think? And we'll have to see. What if you had taken this advice, listened to this article, and bought an apartment in Sydney? Jumped on board, done your research by looking at the article and talking to some, family member at a barbecue, and jumped in. And now you've had to sell for 15% less than you bought it for. Units are going pretty cheap now in Sydney. And that's not even considering the whole consumer confidence issues that are there with around multi-res construction. So there we have it, everyone. On the same day that Australia announced the worst decline in GDP in living memory, since the Great Depression, when unemployment is at 7.5%, with significant numbers of the population are depending on the government through either JobKeeper or inflated JobSeeker, when mortgages from the banks are given mortgage holidays, when people are quickly selling their property at significant discounts to get out of the market, when we've got the ability to trade while insolvent, where businesses can trade while insolvent, companies, defeats the whole purpose of having a company, really. What extra protection does it provide the person doing business with it? Now is apparently the time to buy, according to the Finder economist experts, who, of course, because they managed to predict, notice how they've done it, they managed to predict this 0.25 cash rate. What do you think, everyone? Do you believe this stuff? Do you challenge it? Or do you know your family and friends that are just you see them, they jump on the headline, and they don't dig any deeper? That's what's dangerous. That's why we should look at it, we should pull it apart, and we should challenge it. That's a good thing. But I don't know. I think I'd wait a little bit before I was rushing out now. You'd hate to be a young couple that jumps in and then gets trapped in negative equity. As always, thank you for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions in the comments down below. If you'd like to support the channel, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day, and I will see you all in the next episode.